So a positive day coming through, despite the fact that we're still seeing weakness in European markets. US looking stronger today, though.
Yeah, it's nice to see a bit of normality return to the markets, I think, after the past 10 days. There's no doubt that the US and Europe have their problems. I mean, this is well documented. What surprised me was the sell-off or the reaction to the downgrading of the US last week. This wasn't new news. What's changed from last year to this year in terms of the US debt? Absolutely zero. So it was surprising, and I think whether it's a turn to fundamentals or not, I think investors have realized that it was a bit of an oversold and that there are bargains to be had out there. If you look at the corporate US, they are cash flush. I think they've got about $1.2 trillion sitting on their balance sheet. Apple alone have more than the US government. And Japan has $3 trillion. So the companies are in very good shape despite what's happening in the economies.
I'm glad you mentioned cash positions, because we saw that coming through with MTN today. We saw that coming through with the JSE results yesterday as well. We're starting to see a lot of the corporates having very strong cash positions. Do you think that the right thing to do is to pay it out in dividends?
Yeah, I think so. Obviously, after what's happened over the past 3 years, companies have begun to look after themselves. They're worried that credit lines might dry up if we have to have a double dip. So they have been building up these cash positions, and I think history has shown us that companies aren't very good at spending the money on acquisitions. We much prefer to see it paid back to shareholders in special dividends or buying back their shares like Clicks did. So yeah, we definitely favour them giving it back to shareholders. MTN, it was very nice to see. I think their past CEO was very keen on doing a deal before he left. He wanted to spend the money, and luckily for investors, he didn't get to do that. And it's nice to see they increase their payout ratio to about, I think, 60 or 65%. That's good news for investors, despite not a great set of results.
Okay, well, let's just take a look at MTN's results a little further. Were you happy with the overall data revenue front? Because that's where we saw quite a nice chunk, nice increase there. Data
it was nice. I think
about 25%.
Yeah, I think it came in. They actually got more revenue through data than SMSs. This is mainly local. Data penetration, I think, in Africa is not great. So this is a good avenue for them to grow. We've seen a capex of about 22 billion, I think they said. This isn't in SA, this is rather in Africa and the Middle East. So if they can get that data revenue up in those areas, I think we could see a very nice revenue stream coming through there.
Do you think MTN is a buy at these levels? I know that you are a value investor, so is it looking slightly expensive? Because some say it could actually outperform.
MTN's a very high quality company, I think, and it probably deserves to trade at a slight premium. Having said that, a PE of 18 probably looks a bit full for us. If you buy into the growth story, I think they could do well going forward, but as a value investor, we would obviously tend to favour a Vodacom. Their dividend's very nice to see, a dividend yield of 4.5. We do like that. Vodacom, however, have a dividend yield of probably around 6 or 6.5%. So we tend to favour Vodacom at these levels.
At what level would you actually go in and buy MTN? Ended the day at 137 Rand. It was flat, so the market perhaps divided on the numbers today.
Yeah, I think when the numbers came out, it went down a bit, and then it recovered later on in the day. Geez, what levels would we go in? I think that's a very difficult question to ask. I think you're looking at probably a fair value.
Not even in your investment strategy agenda when you look at the likes of MTN?
No, I think a fair value P is going to be closer to 16 times, somewhere around there. So anything below that, you're moving into attractive levels. At exactly what level we're going, that's going to obviously be a relative call. You
also mentioned Clicks' share buyback. Tell us about what you think when it comes to Clicks. We had retail sales numbers out today for the month of June.
Yeah, unfortunately, I haven't even seen the retail sales numbers, so I can't comment on them. Retailers in general, I think, I've spoken about it before. I think they're looking fairly expensive. This is the whole Africa story. Your soft retailers in particular, Pick n Pay's, Massmart's, ShopRite's, these sort of companies trade on very high Ps. We are not too bullish on that sector by any stretch of the imagination.
Okay, so you mentioned bargains in this kind of environment. We know, as I mentioned earlier, and I've been mentioning this over the past few days, aggressive movements to the upside and downside when it comes to the top 40, offering opportunity. Your view in terms of what stocks are offering opportunity right now?
Geez, it's very difficult to pinpoint specific stocks. I think if we look at industrials as a whole, what you're seeing is that your international industrials, your SABs, your Richmonds, your Naspers, they trade on exceptionally expensive multiples at the moment. Whereas if you look at your homegrown industrial companies, your transportation companies, your packaging, construction companies, some of your IT companies. I think that's where we've seen value at the moment. The disconnect between the valuations of those two sectors, or subsectors, if I can call it that, is the largest it's been in the last 25 years.
When you say packaging, have you been buying up Impact?
No, we don't hold Impact. We don't hold an Impact. We tend to favour some of the smaller packaging companies, Bowler Metcalf, Winhold, Transpaco. These aren't companies that we hold across all our portfolios, but we hold them in certain places. They're obviously small companies, but all three of those companies have shown exceptional earnings growth over the last 10, 15 years. So that's where we are.
Bid turning hostile, SAB up 2.4%, and adamant about the acquisition when it comes to the Australian Foster's company. Do you think that was the right move?
Yeah, I think the price that they've offered, I think is, I know Foster says it's too low to even talk about it. I think given what Fosters have done over the last few years, I think that's a fair price for them to offer. I think it puts them on an enterprise value to EBITDA of about 12 times. That's quite full, I think. So I don't expect to see SAB lift that offer too much higher. In the 2 months when they first expressed or their first offer, no other bidders have come forward. So I think Foster's shareholders have a lot of thinking to do. If I was a shareholder in Foster's, I would seriously consider that offer.
And I think if I was a trader trading these gold shares, I think I'd probably have a headache right now. When I see these movements, Harmony is down 3.7%, Goldfields down 1.6%, Anglo Gold down 0.25%. Very different picture yesterday, different picture the day before. What exactly is going on when we see these kind of massive movements, which are basically cancelling each other out on a day-to-day basis?
Yeah.
What scenario is actually playing out on the ground?
Gold's a very difficult one to call. This is speculation. I've said it before, when you buy gold, there's no investment case behind gold. You hoping to buy it, you buy your ounce today and you hope you can sell your ounce tomorrow to someone who's willing to pay more. It's not platinum, there's no use for gold. So it's very difficult to build an investment case. I think we've seen quite a few of the gold companies report recently. Whilst the results were good, I think if the gold price had gone the other way, I think those results would have looked disastrous. The gold price definitely helped a lot of those companies. So gold at the moment, what's happening in Europe, what's happening in the States, speculation, is inflation, is the Fed going to end up spending money? Is inflation going to come? Is it going to be well, obviously it's a good inflation hedge, so do you go into it or don't you? From a value perspective,
do you hold
it's very
physical gold?
We don't. We don't hold physical gold, and we don't hold gold. We don't have any exposure to gold through gold companies.
And Andrew, just very quickly, from a strategic perspective, does Cannon Asset Managers believe that we could possibly be heading into a double dip scenario?
I think the double dip scenario, the probability is definitely increased. I'd say there's probably slightly more than 50% chance of moving into this double dip that's been spoken about for the last year, I guess.
Reignited only recently. Is this going to change our strategy going forward? Probably not. We're looking for cash-rich companies. I mentioned it before. A lot of companies at the moment are cash-rich. We're looking for deep value, so we're not necessarily focusing on this big earnings growth. We want to rather see this multiple expansion, wait for the value or the value add to come. So we're not too concerned about, does it go into double dip? I mean, obviously we're concerned, but it's not going to change our investment strategy.